real estate investment and mortgage gurus with us tonight to provide the best insights you could ever get. So tonight we have with us Mr. Hussain Panchwani and Sharmeen Panchwani, the power couple of the real estate industry. So first we have Mr. Hussain Panchwani. He's an expert mortgage lender and the CEO of Dream Home Mortgage. And Hussain is a veteran in the mortgage industry with decades of experience helping clients make smart financial moves. So tonight he will be here with us to guide us about the mortgage trends and the anticipated rate changes. And joining him, we have Sharmeen Panchwani, the co-founder of Dream Home Mortgage, a real estate investment expert. And with her knowledge, Sharmeen provides her insights on the hottest investment properties and opportunities for foreign investors and why real estate remains a hot topic and the best option in times of uncertainty. So thank you so much for joining us, Sharmeen and Hussain. A word from you, Hussain and Sharmeen. Yes.
I think his mic is muted. Hussein's mic is muted, but I'll introduce myself a little bit. My name is Sharmeen Panchwani. I've been in this industry of mortgage and real estate for almost more than 2 decades. So we have seen it all. We have seen the highs, we have seen the lows of the market. We are quite excited about 2025, as I think after Biden, I think it's the time for a new era. And I think since Trump has come in, a lot of confidence is coming back in the real estate market. I'm getting a lot of momentum going. A lot of people are excited. So let's see how 2025 will bring for us. Hussain, do you want to say a word on this? He's still muted for some reason.
Your mic is on mute.
Unmuted.
Yes, you're fine now.
In the presence of 2 ladies, we thought it's best to mute you.
When I see Sharmeen, I get muted anyway, so it's okay. Anyway, welcome to all of you who have taken this time to join the webinar, taking time out from your family time. So we wholeheartedly appreciate that. And about the market, after Trump has been officially elected as the president, we are seeing, it's been just 2 weeks, we are seeing a lot of positive vibes, positive momentum, like Sharmeen said, in the real estate market. The interest rates on the residential side have not dropped like we were expecting. But the commercial side, we have already seen since September, the rates have dropped by almost 0.75% on the commercial side. Residential side, we are expecting Q1, Q2 of 25 rates to drop by almost 0.5 point to 1% in 2025. So having said that, I think, yes, there is a lot of positive momentum in the real estate market. And the business world also, it's all excited about the new president. They are all excited.
So that's an expert for you, jumping right into the nitty-gritty details of the mortgage rates and everything. So thank you so much, sir, for introducing yourself. Thank you, Sharmeen. So before we move forward, I want to introduce Dream Home Mortgage to you. Many of you are aware of what Dream Home Mortgage is because of achieving their dream homes through this platform. So Dream Home Mortgage is like the backbone of today's session, and Dream Home Mortgage has been helping the clients across all 50 states for past 27 years or 28 years. And has
1997. So we actually, mortgage itself, we have kicked off our 28th year of being in the mortgage industry. Dream Home itself, 27th year of being in business. So mortgage business, we have been in mortgage business for 28 years. Dream Home itself.
So I think we have more than 50 years of experience over here on this platform altogether. And Dream Home Mortgage helps clients across all the states to achieve their dream of home ownership and grow their real estate portfolios. and we specialize in all kinds of loans and refinancing processes and investment opportunities, commercial loans. So tonight we are going to break down this shifting landscape, and it will help you make informed decisions about real estate and mortgage. So now my first question starts with Hussein. Hussein, what are we expecting from the Federal Reserve in coming months? How should homeowners and investors prepare for potential rate cuts?
So like I said earlier, there is a very strong rumor that we will be seeing further rate cuts, and which will eventually have direct impact on the interest rate. President-elect has very clearly said that he will make sure that he keeps the rates low and attract more first-time home buyers, whatever it takes. So having said that, one thing I just want to make listeners aware, investors aware, first-time home buyers aware, that if you are waiting, you are on the sideline, if you are a first-time home buyer, you are waiting for the rates to drop. Don't do that. If you are ready to make the move, this is the perfect time to buy the house. And I might sound biased, but the truth is, if you go by the last 25 years history, the 2002 dot-com bust, 2007-8 financial meltdown, 2012 real estate slowdown, right around COVID and after COVID, when the interest rate starts dropping, the house prices starts going up. So I would rather buy a house at a lower price, lock my purchase price, and then 1 year later I can finance my house. So it always makes sense when there is a buzz out there that the rates are going to drop, but the real estate market has not picked up. I feel that's the best time to make the move, because it is still buyer's market and there is a lot of inventory out there. So I think this is the perfect time. Those of you who are investor or first-time home buyers, if planning to buy a house, it should be now.
All right, thank you, sir. So before I move on to the next question, I would just like to remind you all that our chat box is open for all your questions. You can drop a question in our chat box and we will get to it at the end of the session. Now, moving towards Sharmeen. So Sharmeen, international investors have always been drawn to the United States. So with policies shifting and a favorable tax environment, so how does this impact the foreign investors' interest?
Our foreign investors are always looking for a safe haven, and United States has always been a safe haven. And now it's even more because of the deregulation, better interest rates that they are looking forward to. They're a very good market. It's the best market to invest in the United States. So I think what we need to understand is this is the time where a lot of investors are showing a lot of interest from foreign countries like UK, because they have lots of taxes and they feel that they need to diversify in other countries. And the United States is one of the best places where you can actually achieve your goal of having a diversification and getting into a home with only 30% down. They don't even have to pay all cash. A foreign investor who comes in the United States, even if they don't have any credits, of United States, but they have a job in their own country, they have legality, they can transfer their funds with 30% down, they can actually own a home in the United States. So that's unbelievable. And a lot of my clients who are foreign nationals, they are very much interested. I'm just closing on a home of a person who was in UK, and we are trying to close him next week. And he actually is a foreign investor. And it was so easy that he himself was shocked. And Hussein is going to share a story about that.
Oh, yes. I wanted to ask that, what is the process for the foreign investors? Like, do they have to be there physically? And how does Dream Home Mortgage facilitate with that? Hussein, if you could please enlighten us.
So I'll give you this example that we are closing next week. He signed a contract 6 weeks ago, and he asked me ample of time, does he have to pay cash? And because, first of all, we were able to get negotiate with the builder because they wanted to make sure they close before the end of the year. and someone sitting in United Kingdom. Even the builder was shocked because they don't have such kind of programs. Um, so so now he's sitting in United Kingdom. The only document he gave me was his ID and bank statement to verify that he had enough funds to close. Those were the only documentation we needed. That so he could not believe it. We got his clear to close probably last Friday, and the only thing pending was his certificate of occupancy. And he kept asking me, Hussein, are you 100% sure? I'm like, we are done. And he's like, oh, my bank said it cannot be that simple in United Kingdom. Can you send me a proof? I sent him a proof. Then again, he was like, are you sure I can wire the money? I'm like, I send you the proof. It's all ready to go. So what I'm trying to establish over here is basically for foreign investors, it's as simple as it can be. The documentation, like you asked me, is bank statement to show the funds that you have 30% down, and basically your driver's license or your ID. And the icing on the cake, if you don't want to, you don't have to come to United States. The documents can be sent to you. You can go to the US Embassy, get the documents notarized. You are more than welcome to come to United States. Or you can give your family member who's already a homeowner power of attorney, and basically he can sign for you. So there are some, this is a very great program, very simple, and I feel a great opportunity for foreign investors to own a home in United States.
All right.
And I want to add one more thing again. The best part about this investor was he was able to get a builder's brand new home. You know, builders don't give a brand new homes to investors, but this particular builder, I was able to get almost $35,000 less while negotiating. So this is, Hussein is right. This is the time to actually negotiate, because a lot of builders want to just close their books. They are offering best inventory homes. They want to close on the houses, and you can jump on and you can actually negotiate a good price. So I suggest anybody who's sitting on the fence and just thinking about it, this is the time before December to actually close on a home. And it's not a sales pitch, but it's the reality, because you do end up getting some great deals out there.
Yes, thank you for the insight, Sharmeen. That's really helpful for all those people sitting there thinking that maybe it's going to be a long process. Like you said, that you couldn't believe it, and their bank said that it is not that simple. Maybe it's you guys who make it seem that simple. Make it that simple for everyone. So thank you so much, and thank you everyone for dropping in the questions. I would just like to remind you that we'll get to the question answers at the end of the session. Thank you so much for sharing your questions. And if you have any more questions, you can keep dropping them, or you can personally reach out to us at info@dreamhomemortgage.com. Our contact number is also there. You can book a free 30-minute session with us through our website, www.dreamhomemortgage.com. And Sharmeen and Hussein will be there for you, and you'll be in safe hands. So moving forward, Sharmeen, let's talk about geography. So which states and regions are like the hotbeds for real estate investment next year?
I basically, real estate is what we focus on in Texas, but we do loans all in 50 states. We have seen a lot of investors interested in hot spots in Florida, because that's a good vacation places for a second home. So investors do like going into Florida, Arizona, Texas. These are very hot places. California is high in prices, but I think still we have a lot of room in Texas. I still feel there's a lot of builders, a lot of construction going on. So I definitely, because I'm in Texas, I've lived in Texas for 32 years, I still feel Texas is a very hot market.
Plus, there are benefits of owning a home in Texas. Still, you can still get a great home in great location for under $350,000, which in Arizona, Florida is unheard of in most of the pockets. Secondly, Texas, like Florida, does not have any state income tax, so that makes it more attractive. And if you look at number of people moving to Texas, it's unbelievable, especially after the recent hurricane in Florida and Carolina. So what we are seeing is a lot of people are moving to Texas. So not only for not only for people moving in, but for investors also, Texas becomes a safe haven. So I feel right now, fortunately, we live in Texas, but the facts are Texas
And
is
rental
not
market
the
too.
hottest place.
Rental market is very stable, very, very stable in Texas.
And what about the cost of living?
Texas is better comparative to other states, Um, there are some places which is much more expensive, but Texas is still something where people like to come in with their families and stay in here. So yeah, cost effective too, for sure.
Cost of living compared to other states is relatively low. So yes, cost of living, prices of houses makes Texas very attractive.
All right. Okay, so moving forward, Hussein, my next question goes to you. So, when it comes to refinancing, timing is everything. So, we have been receiving some questions about refinancing at our email. So, I want to know that what should home buyers consider before deciding to refinance in this fluctuating environment? What's your take?
First of all, means keep your eyes and ears open. Like I said, the rates had dropped to almost 5.5%, 5.6 to 5, depending on your credit score. But in September, it was there for almost a week and a half, and then suddenly we saw a spike, and now we are back to mid sixes, higher sixes on conventional. So those of you who are planning to refinance, if you have rates higher than 6.5, just be ready. I honestly believe first quarter and second quarter, we will start seeing rates in the 5.5 range. So I feel just be ready, keep your eyes and ears open.
And we are talking about cash out refinancing, right?
So cash out refinancing, entirely a different animal. What we have seen is, uh, I have recently, for whatever reason, I have had more application in last 2 months for cash out refinancing than refinancing, even though before the rates started going up. When the rates were in the mid fives, also we were getting more applications for cash out. Number one reason, people want to pay off their credit cards, pay off their car, pay off their student loan, just have one mortgage payment. Number two, a lot of people are taking money out, especially from their investment property, and going and buying another investment property. So what I say is putting your money to work for you. So here you have an investment property you bought 4 5 years ago. You have 150 $200,000 equity that you can pull out. You can take that money and you can invest and buy two more properties. Now I have been asked this question in the past: do I have to pay taxes when I get equity out of my house? The answer is no. You have to pay taxes when you sell that property. Depending if you do a 1031 exchange, again, that's a different scenario. But just pulling out cash from your house, you don't have to pay taxes on that. So I will really request, appeal to the borrowers, who are sitting on the equity in their house and struggling or stressing out every paycheck. I have to pay this credit card, I have to pay that car. I'll shuffle between paying this credit card, that car. If you are sitting on you have enough equity in your house, cash out can be a great option where you can pull out that money, pay off your car, pay off your credit card, and just have one mortgage payment.
All right. And Hussein, after refinancing, another hot topic right now is the commercial loans. So, and Dream Home Mortgage offers services of commercial loans as well. So, what do you what's your take on commercial loans?
So commercial loan, like I said, in fact, since in last 2 weeks after Trump was elected the president, that he won the election, we have seen lot of activities, lot of movement in the commercial side. I'm getting more requests for pre-approvals. People who are holding on to their construction have started constructing their, either it was office complex, office condo, shopping complex, sports arena they are constructing. So now they are back, and we are also seeing a lot of activities. People are buying land suddenly, now they're putting offer for lands. So again, just in anticipation that there'll be a lot of good things happening when Trump takes over the presidency in January. We are already seeing that activity in the on the commercial side also. So that's great option, great sign for the coming years.
All right. So, both of you, given President Trump's background in real estate, are there any specific policies or patterns that we should anticipate that may affect the buyers, sellers, or investors? Sharmeen, what's your take on that?
Definitely. I think he's a businessman. He's a business tycoon. He's a real estate tycoon. He always believe he's not a politician. He's more of a businessman. Definitely feel that he's going to bring in some deregulations in the mortgage industry. He is going to make sure that the rates are lower, and therefore, so the affordability can be higher for the first-time home buyers. They have been talking about it in their rallies and stuff. I just want to keep checking and keep seeing what other opportunities he's going to be bringing in the next quarter or two. I think they're being very aggressive, and this is the time to actually get into the home ownership or the real estate portfolio. If you are ever interested in it, just set up a time with us, get your paperwork ready, get all the documentation ready. So as soon as we see something happening, we can always tell you what are the new offers for the home buyers, and we can actually tap into that, great deals out there. I'm very hopeful with the deregulation that he has talked about, the affordability that he's been talking about. We should be in a very good shape in 2025. I'm really hopeful.
Let's hope so. And so, what's your take on this?
I honestly believe that what Sharmeen just said, that President Trump has made it very clear that he's going to make housing more affordable. He'll do whatever it takes to keep the interest rates lower, and he'll do whatever it takes to especially have incentives for first-time home buyers. So let's hope so that happens and he's able to execute the plan. But again, repeating the same thing, that there is a lot of positive vibes, positive vibration when it comes to real estate market, whether it's residential or commercial.
Not like you had an option to disagree with Sharmeen, but you endorsed the same point. Okay, so thank you so much for your insights. Now we want to move on to the questions. So everyone, you can still drop your questions in the chat box, or you can reach out to us at info@dreamhomemortgage.com. I would like to inform you that you can book a free 30 minutes consultation session with the mortgage experts and through our website, www.dreamhomemortgage.com. Our number is also available there. So if you have any detailed questions that you'd like to discuss, you can always reach out to us. So thank you so much. Now we'll jump to the questions. Now, okay, hello everyone. Now, the first question is, what are the tips for mortgage applications as self-employed?
So self-employed borrowers, there are a lot of different programs for self-employed borrowers. Of course, your credit is going to be, we're going to evaluate your credit the same way, whether you're self-employed or salaried employee. But there are more programs for self-employed borrowers. Instead of looking at your tax returns, we can qualify you based on your bank statements. But any portfolio loan, I want to be very upfront that the rates are higher, the closing cost is higher. But you are not just stuck, or you don't have to qualify based on your tax return. We will completely disregard your tax returns and qualify you based on your bank statements, deposits made in your bank statement, not an ongoing balance. So when you're self-employed, there are a lot of ways to get your loan done. And there are different options for self-employed borrowers compared to a W-2 employee.
And the process is very simple, right, Hussain? I've had many clients who cannot qualify as a salaried employee, and you have been able to get them self-employed loans, and it's a very simple process.
And if you're a salaried employee, you might be thinking, why are these self-employed borrowers getting the benefit? They're not going to get any extra benefit. The reason is self-employed borrowers, they take all the tax write-offs possible. They'll take all the deductions possible. So sometimes their tax returns, the income on their tax returns don't justify their income, because the law allows them to take all the tax write-offs, the tax deductions. So in lieu of their tax returns, we will calculate their income based on the deposits made in their business account. There is a certain formula that we use, but the process is very simple, and rates are probably a point higher than a regular Fannie Mae Freddie Mac product.
All right. I hope this answers your question, and I think it's the time for you to make that call and book that session so that you can, guide further. You can get further guidance. Now, the next question is: are there any government-backed mortgage programs?
There are some FHA programs, USDA program. So those are for lower income household. Those programs are very attractive, where you can go with 3.5% down, even with lower 580 credit scores. So there are certain programs based on your income. Like I said, FHA loan requires 3.5%. USDA in certain neighborhoods requires 0% down.
Right. So the next question we have, I think that's pretty much what we have been discussing. After Trump being back in the White House, there is a lot of debate that what is going to happen. So I think you have answered this question already, that what is the influence going to be on the mortgage rates and the lending practices. So the next question is, could we see any big changes in the lending rules? Sharmeen, if you could answer that.
I think there's some going to be deregulations. That's what they're saying. That it's not going to be that harsh. I feel there'll be some new programs coming in, more attractive towards the first-time home buyers and for the investors as well. I think he wants more affordability. That's what his rallies, he's been telling clearly that. And that's what Kamala was also trying to do. I mean, I'm not just saying it's just Trump. The whole government is wanting more affordability for US citizens. So absolutely, I think it's something where I think the vibe is really positive. I really feel that the industry is going to go revamp, and it's going to get really, like Hussein said, the prices will just shoot up. I feel this is the time where you need to start getting all your documentations ready, talk to us, see what's out there for you all, and be ready. Why not? I mean, if it's time for you to make this is the biggest financial decision in your life. Home buying is one of the and we have held hands for so many of our clients, where we have done their loans, their families loans, and we have built their portfolio. So why not you stay? If you're on the fence, you want to be an investor, you want to be in the real estate market, this is a time for you to come on board, talk to us, get everything ready, get educated, and move on with that. So I have great hopes into 2025.
I get to correct my wife live on air. That's the best, man.
That's the first.
That's the first in 30 years. But anyway, on a serious note, she said just US citizen, but there are programs, all the programs, whether you are a US citizen or not, permanent resident, EAD card holder, on TIN, there are programs out there. Absolutely. And most of the programs, when you are, as long as you're legally authorized to work in the United States, what apply to a US citizen will apply to any authorized employer in US. So as long as you are an authorized, you have a valid work visa, EAD card, H1, E2 visa, even TIN numbers, there are certain programs for them. So there are a lot of programs, even if you are not a US citizen. I just wanted to clarify that.
Thank you, Sin. And now I think I remember in one of the previous webinars, we talked about the trend among the young generation towards home buying. So I just read this question, and I think it might interest you all, because I think you would like to give more advice on this. So there is a question from Ayush, and it says that I recently started a new job. I'm working on improving my credit. Now I'm worried about whether I'll qualify for a mortgage and what kind of interest rates I might face, because I'm balancing student loan repayments and saving for a down payment, which feels overwhelming. But given my situation, what steps should I take to strengthen my mortgage application?
So basically, I always feel like he's on the right track. There is a fine line between what you can qualify for a loan and what is your affordability. And I have always emphasized on the fact that, don't try to keep up with the Jones. Whatever you are comfortable with, that's what your qualification is. If you're just starting your job, if you want, one thing I want to clarify, don't wait to save 20% to buy a house. I don't understand the thought process behind that. Think about it. If you have 5% right now, and you have to wait for 2 more years to save 20% down. The house that you could have got for 250,000 has already gone up to 300,000. So yes, there is this for whatever, there is this myth out there that I don't want to pay mortgage insurance, or I'm not comfortable paying the mortgage insurance. That money is being wasted. But for that, if you are going to wait 2 more years, you are paying $50,000-$70,000 higher to purchase the same house. So I just don't understand. When is the right time to buy a house? When you are comfortable and you are confident, when you and your spouse decide that now you want to buy that house. And I will always encourage better sooner than later, because real estate is an appreciating asset, whether it's an investment property or your primary residence. Year after year, it always appreciates.
All right. So thank you so much. Next question, moving on. Sharmeen, I'd like to ask the next question from you. It says that Trump likes to cut regulations. Do you think we'll see easier lending options because of that, or could it make things tricky for some buyers or investors?
No. I think he's going to cut interest rates and things are going to get better for sure. We are very confident. The entire industry is confident right now. I just said it in the beginning. There's so much momentum. We are shocked. Hussein is shocked. We started getting calls. People are excited. They all are anticipating that it's going to be a better year in 2025. Absolutely.
So I read something like I see some negative vibes. So I think this cancels it out. So there are no negative vibes at all. I think this would turn out as the golden era of real estate as
real estate. That's what he's been saying. Yes.
So moving on to the next question. The next question, I think either of you can answer. It says that how do I analyze a property quickly for investment?
So the best way is, of course, the condition of the property. And even in this current higher interest rate environment, now you'll be surprised what I'm going to say, but even if because the rates are high, if your rent is covering 75-80% of your payment for the time being, and you think you're walking into a good deal, 75%, 80% of your payment, including your property tax, insurance, principal and interest, and the condition of the house is good, and the rental demand is high, make that move. Don't go by the age of the home. I myself have clients, have owned homes that are built in 1970 and have properties that are built in 2005. Once you become the landlord, how you maintain the property. So I just look at the neighborhood, what is the supply and demand for rental properties, and then I make that move. I never look at the age of the house.
So ask your realtor, whoever your realtor is, for the CMA, comparative market analysis, and also do the lease, rent comps, what are the rents around this area, and you should be able to make a very viable decision based on.
And just to make it very quick, he said the question was quickly the condition of the house, and if the rent covers, at least with the current interest rate, if the rent covers 80% of your payment, and if there is steady, if your realtor says, yeah, this is a good rental market, I would jump on that property.
And location. Absolutely.
And I would say that if you don't want to get in either of those details, contact these guys. And if they give it a go ahead, that is the simplest solution for you and the quickest way to analyze a house. If they say it's a yes, then it's definitely a yes. So moving on to the next question, I think I was almost kind of missing this because for all our webinars, we've been talking about first-time home buyers, and this is the first time we talk about something else. But thanks to our listeners, they want to talk us about first-time home buyers. So the question is, what should the first-time home buyers know before making their offer?
Sharmeen, you want to take over, or you want me to?
No, I would just a pre-qualification. I mean, before you even start to look for a home or contact a realtor, please pre-qualify yourself with a lender. That is one of the most important thing I would say. Many of the people, they contact me and they say, Sharmeen, show me this home or that home. Please of course, because I'm in the mortgage industry since so long, I have all the insights about it. So I always tell them, first pre-qualify yourself, because every situation is different. Right now you had a job, now you've become self-employed. So I mean, there are so many things that you need to know before you even get into starting to schedule for homes to view. So I would suggest get with a lender, talk to them, see exactly what your situations are, get yourself pre-qualified, and then start looking for the homes and contact the realtor after that. That's what I would suggest.
So when you're planning to if you're a first-time home buyer, remember the acronym CIA. CIA, very simple for all of us in the United States. CIA, credit, income, assets. How's your credit? Especially last 2 years. The magic number is 2. 2 years of credit, 2 years of employment, and 2 months of money in your bank for down payment. So the magic number is 2. 2 years of credit history, 2 years of employment, and 2 months of money sitting in your bank. Or you can get all gift. I'm just giving you the basic rules. These are the basic. There are different ways, but I've been asked this question, Hussein, I have read on the net that I have to have 2 years job history, but I just graduated last year. Can I buy a house? The answer is yes. Oh, do I have to put 20% down? The answer is no. You can go with 3% down. So if you just graduated and now you want to buy a house, you are ready for it, you can go with 3% down. If you are working in the same profession from where you graduated, the field you graduated, and same profession, you can buy a house with just 3 to 5% down. So there are a lot of different ways. So when you get pre-qualified, what do? We look at your numbers, we look at your income, and then we discuss with you, this is what your payments are going to be. This is the money you need at the time of closing. Very, very important. 2 important factors. How much money you need at the time of closing, and what payments are you looking at? Because these payments you're going to be making for next 5, 10, 15, 20 years. So I feel like Sharmeen said, pre-approval or pre-qualification is the most important step before you step into the real estate market.
All right, there is another question that is somehow linked to this one, so I want you to cover that one as well. There's this person who is asking that, are there any points that disqualify you as a first-time home buyer?
What was the question?
Like, they're talking about what qualifies you as a home buyer. So now the question is, are there any points that disqualify you?
So if you have owned a home for within the last 3 years, whether you or your husband or you or your wife have owned a house within the last 3 years, then you are not a first-time home buyer. So a lot of people say, oh, I live in this house, but this house is on my husband's name. Especially in community states, if you are living in a house that's owned by your spouse or your partner, then it's not a first-time home buyer. You're not a first-time home buyer. So keep in mind that you should not have owned a home in 3 years, whether it's you, your husband, your wife, your partner. Not your partner, but your husband or wife.
All right. So I think the topic of politics attracts a lot of people. And I think there's someone who is trying to ask that, how are you predicting this change? Like, they're saying that, how do you think the mortgage rates are going to get lower? Because they think that everything is just increasing for now, what they see. So how do you say that it is going to decrease and things are going to settle?
Sharmeen, you're a Trump fan. Why don't you take over?
No, it's not true. It's just that I'm a businessman. I'm a businesswoman. I believe about dollars and cents. I feel honestly the way he has been telling, and he's a businessman. Let's face it. Forget about any politicians, any politics. He is a businessman. He knows the core that he wants people. He wants himself as an investor to get the best bang for his buck. Okay. And I think he feels that, and that's what I really believe in him, in that part, that when he was there, he did made some changes. I see that more changes are going to be made when he comes in. It will be much better environment for real estate. I feel that way. Hussein, you want to add something else? That
Basically, he has said it several times. President-elect Trump has already mentioned that he's going to do whatever it takes to drop the rates. Now, having said that, history, if you go by history, whenever the rates start dropping, we investors, home buyers, start increasing the prices of the house. So there'll be a influx of buyers, there'll be bidding wars, and that will have a direct impact on the price of the house. So President Trump has said that he's going to do whatever it takes to reduce the interest rate, but that will have a positive effect on the price of the house. So that's why I keep emphasizing, even though I sound biased, but the fact of the matter is, when the interest rates start dropping, the house prices will go up. So if you are waiting, if you're a first-time home buyer, better now than later. I honestly believe in that.
So continuing with this, there is one person who is saying that because of the immigrant labor impact, so they think that if the deportation happens, it could lead to like higher home prices and delays in building projects. So what do you have to say about that?
That is a roll of dice, frankly. Means if there is mass deportation, we don't know how they are going to handle it. But what I have heard from a lot of builders, a lot of contractors, that now, especially now, what they are seeing is the labor market. Most of them are legal. They have some kind of work documents, employment documents, most of them. So in the coming years, we will see what happens. But I think they will have some kind of, I feel they'll have some kind of solution for that, because they have already said that the two markets that will be affected the most is the construction and the agriculture market if Trump carries out with the mass deportation. But they are not talking about the entire illegal population, but especially those who have come in the last few years. But the first he's going to go after the criminals who have any kind of criminal record. He wants to deport them. But let's see in coming months what will happen.
All right. And then there's this question that do you think that with Trump being back in the office, people are feeling more confident to invest in real estate? And are we already seeing prices go up, or buyers are getting more active?
I can vouch for one person who's confident about Trump coming back for sure.
Yes, absolutely. I think so. The prices will go up if there's going to be an influx of buyers, but right now it hasn't gone up yet. So I just said this just happened like 2 weeks ago. So we are feeling like the momentum going on. People are calling, they're trying to pre-qualify themselves, starting to look for homes. So yes, I think next year is going to be a busy year. And while we are saying that, we are also anticipating rates dropping. So that will be a double whammy, People will just love it. It will be a hot market next year.
All right. And there's one quick question that what types of homes do you offer?
Oh, so homes, there are single family homes, condominiums. First, like honestly, what else do we do? We do multifamilies. We do all. We do
duplex, fourplex, construction,
fourplex, duplex,
construction loans. We have clients right now. We are working on 2 or 3 loans where I have clients who have bought their own land, and they're planning to build their own home. I have clients who own fourplexes and duplexes. So it's just townhomes, any kind of home that fits your budget. And what I have clients who say, I don't want to live in a townhome. I don't want to share my, I don't want to share my wall with anybody. So I want that privacy. I just want a single family home. And the newer generation I've seen, they are pretty okay with townhomes. So it's whatever your comfort level is, and especially your price. What price line? What is your budget?
That's right. All right. So we have a lot of compliments for you guys. They're saying it was a very nice session, and thank you, Hussein and Sharmeen. You guys rock. Thank you so much. And it cleared up so much confusion. So thank you so much, everyone. And just want to let you know that if you missed the session, like I have read a comment here that they missed the session, they joined late, but do not worry. you can always book a session with us, a free consultation session. Just go to our website, www.dreamhomemortgage.com, and you can book a 30 minutes free consultation session. Moreover, you can get the recording of this webinar as well. It will be uploaded on YouTube soon, and you'll get an email and notification about it as well. So you can stay connected with us in whatever way you want. You can email your questions to info@dreamhomemortgage.com if you want any further action on your investment, or you want to know anything more about mortgage. These guys are your go-to guys, and you have to just send an email at info@dreamhomemortgage.com and they will get back to you. So thank you so much for joining us in this insightful session. I think I have enjoyed it a lot, and I can see that you all did too. Yes, I keep getting these. Thank you, everyone. Thank you so much. Thank you for joining. Thank you all. And I think with the holiday season approaching, with this all festive vibe, I think the best gift that you can give your families right now is to take the next step. Right, sir?
Just one thing, I honestly, if you are a first-time home buyer, if you are ready to make the move, I would say if the whatever the rumors are on the street, if that happens, whatever house you can buy right now, 1 year later will at least be 5, 7, 8% more expensive. Especially right now, builders are also slashing their prices because they are sitting on inventory. Builders want you to close before the end of the year. So if you are listening to my show, if you are on the sideline, if you are a first-time home buyer, even though you're not happy with the interest rate, because your brother, your sister, your friend got 3% interest rate 5 years ago, and now you have to pay 6.5, 6.75. But if you are ready to make that move before the end of the year, I honestly believe, and do your homework. Don't go by what I'm saying. Do your homework. But I feel this will be the best time because the rates are higher and the builders are very aggressive. They want to get rid of the inventory before the end of the year. So if you snooze, if real estate, we always say, you snooze, you lose. And I feel this is the time right now. And once again, if we are signing off, I really want to thank all of you guys staying there for almost 50 minutes, listening to us. We really wholeheartedly appreciate you guys taking out from your family time and listening to us. And again, thank you for hosting us. Really, as always, top class work. We really appreciate that. Thank you, for all of you guys, for joining us and being on this webinar.
Final word from you, Sharmeen?
Yeah. Thank you, everyone. I mean, you guys, this has been our, we have lived real estate and mortgage. We love what we do, and we want to hold your hands. It's not about making money, honestly. It will come always, but the passion that we have, we want you all to be in some kind of a property, have something for your generation. It's a generational wealth. And I really feel that, you need to get into, if you're on, waiting, renting a place, just call us. I would love to hold your hand and get you in a home or get you in an investment property. Hussein and I take a lot of pride because we have done loans for people, and we have done their children loan. And now we have done their portfolios, like we've made their real estate portfolios for them. So we take a lot of pride for 25, 27, 28 years. That's what we do. So, and honestly, we all work hard, but it's not just about money. It's about the passion. And I think real estate is the best way to make millions. Millionaires being made with real estate. So definitely, I would suggest anybody and everybody, just get on a call, have a 30-minute of session, try to talk to us. We'll walk you through. We'll hold your hands. We'll make it happen for you. So don't get nervous. Okay?
So one last one.
Yeah,
If
sure.
you make the millions, your wife will have that money to spend, right?
So it's a win-win situation.
It's a win-win situation, definitely.
So if
Nice.
getting
Good
a
night.
home was on your bucket list this year, you have one last month and you have these guys. So I'm sure you can still take it off your bucket list. So thank you so much, everyone, for joining us tonight. Thank you so much. If you have any more questions, drop questions.
Happy holidays to everybody. Happy holidays.
Happy holidays.
Thank
Bye-bye.
you, everyone. Good night.